All right, everybody. Welcome back to Strongman Personal Finance. I am Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser. It's for $3 on Amazon. I know, it's going to bankrupt you. And hater of trash stonks that are pumped by degenerate clowns on Wall Street bets. Now today, we're going to talk about CLOV stock, also known as Clover Health Investments. Now, supposedly, this amazing company, this Medicare Advantage company, is going to take over the entire Medicare Advantage industry and become a dominant force into the future. And they claim this because basically they have this amazing algorithm and technology that is disruptive. Now, they use the word disruptive because that's all you got to do to have people invest in your stock nowadays. And supposedly they're going to, carve out a massive market share in the Medicare Advantage industry. Now, let's go look and see what or how many people are enrolled in Medicare Advantage plans. So, enrollment in Medicare Advantage has doubled over the past decade. Okay, wow, that's pretty impressive. But what percentage of that is Clover going to control? All right, let's see. Let's look at their competitors. Let's see who they're competing against, who they're supposedly going to conquer and take over. And you might recognize some of these insurers. For example, for all the Medicare Advantage enrollment in 2020, United Healthcare had 26%, Humana 18%, Blue Cross Blue Shield, CVS, Kaiser Permanente, all these massive established companies with way more resources and way more ability to take on new upstart competitors are competing against this amazing, delicious company, Clover Health. Now, I was reading an article about this company, and they basically claim they're so amazing because they have this awesome analytic and diagnostic technology that's going to, basically take over everything. But every other competitor is also developing the same technology. For example, United Healthcare, which is the freaking largest one on here, uses proprietary automated medical record software and digital therapeutics for remote monitoring, enabling clinical care teams to capture and track patient data and clinical encounters, creating a comprehensive set of care information, bridging across home, hospital, and nursing settings. Proprietary predictive modeling tools help identify people at high risk and enable care providers to create individual plans. Doesn't that kind of sound like basically what Clover Health is claiming? Yes. Clover Health has significant obstacles to overcome. It's a new upstart company. Its claim to fame is this supposedly amazing algorithm, and they're obviously cheaper plans, and they're supposed to be taking over the entire industry, according to Wall Street bets. And they're a bunch of freaking clowns, all right? The claim that Clover Health plans are the lowest cost and the obvious choice is unsubstantiated. In a letter from the SEC on November 16th, the SEC requested CLOV specifically explain the repeated use of the term obvious as used to describe its Medicare Advantage plans. In response, we call our plans obvious because we believe they are highly affordable, offering most of our members the lowest average out-of-pocket costs. Now, the guy that wrote this article, he did a little bit more digging. And he did some analysis based on the company's Q1 2020 reporting, and he looked at the medical claims ratio, which is your net medical claims expenses divided by premiums earned. So basically, the higher the ratio, the more the company's paying out for any kind of medical claims that are filed against or filed to the company, which means they're probably not going to be as profitable as their competitors if their ratio is higher. Now look at their ratio. In Q1 2021 was a staggering 107%. Now you have to compare that to other companies like United Healthcare, which owns 26% of the Medicare Advantage market, 91%. And was that Anthem? 85%. So CLOV, which is supposed to be so amazing and so profitable, and they're going to take over the industry because of their algorithm, they're actually having more losses, okay? They're actually paying out more money in claims than they're earning in premiums, which that's not even profitability right there, okay? Jesus. And you compare that to their competitors, they're getting crushed. It's freaking garbage, okay? Now let's go look at their financial statements. Let's go look at the risk factors. I know. What's a financial statement, strong man? Risk factors. Clover has incurred net losses in the past, and we anticipate increased expenses in the future, and we may not be able to achieve or maintain profitability. Wow. So their one claim to fame is their disruptive algorithm. But if you look at them from a fundamental standpoint, they're bleeding money. They're not profitable. And they're actually getting clapped by their competitors. We have relatively limited experience with the Clover Assistant, and initial results may not be indicative of future performance. Now, like they said, their claim to fame is that they have this amazing Clover Assistant. But if you compare the cost of how much they're paying in claims expenses versus premiums collected, it doesn't look like it's actually doing very good, ladies and gentlemen. Our future performance depends on increasing the lifetime value of enrollments. Okay, whatever. New company. Blah, blah, blah. If we fail to estimate, price for, and manage medical expenses in an effective manner, the profitability of our Medicare Advantage plans could decline, which you can see right off the bat. If they paid more in claims than they collected in premium revenue, they're losing freaking money. Whereas the other insurance companies, they were actually making more money in premiums than they were paying out in claims. That's called a profit, ladies and gentlemen. Did you know that? Wow. So, just reading these risk factors right off the bat, this is freaking garbage, okay? Why would you possibly risk putting your money into this insanely new, publicly listed company that is being hyped by a bunch of freaking clowns on Wall Street bets? Those guys don't know crap about Medicare Advantage plans. Do you think I know anything about Medicare Advantage? No, I'm not an expert. At least I'm honest with it. You think those clowns on Wall Street bets know anything about CLOV? Or do you think they looked at like short interest and blah, 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 and that's their only justification, okay? And just because they post DD doesn't mean freaking jack. You don't put your money in a company that's not even profitable. That is the dumbest thing I've ever seen. Ever! Too new, unprofitable, massive competition, and their claim to fame is freaking weak, okay? But strong, man, it's disruptive innovation. You're so stupid. You're so dumb. All right, let's go look at their financial statements. All right, they were audited. All right, looks like there were no adverse opinions. So you look at their 2020 financial statements, right? And let's just go to the income statement. So right off the bat, you see there's no freaking revenues for the end of 2020, which means this company probably just started making money in the first quarter of 2021, which the guy in this article said, yeah, look at their medical claims ratio. They freaking spent more. They underestimated their claims, which means they had a massive loss because they collected less premiums than they paid out in claims. Wow, that's a really killer business right there, ladies and gentlemen. All right, so right off the bat, they're going to be losing money, okay? Net cash used in operating activities, $2 million. Is that in thousands? No, that's in millions. $2.2 million. And I suspect if the company is losing money, they're going to have to issue more shares of stock to stay afloat. Now, what does that do, ladies and gentlemen? That dilutes the current shareholders. If you become diluted, your share of the future profits will be decreased and decreased because you own less and less of the company, okay? So ignore these clowns on Wall Street bets. They don't care about fundamentals. All they care about is short interest and the moon. And they have these little shirts like, oh, I'm an ape. Like, that's funny. That's not funny. It's stupid, okay? You guys aren't funny. Your little movement is going to fail. You're not going to take down the hedge funds. And I don't know why you would want to. And if you want to fight against market manipulation, you know what you can do? You can invest in index funds. You just track the world market and you hold it, and you can actually circumvent the financial services industry because you're not participating in active management. That's how you beat the system, ladies and gentlemen. Not buying stupid stocks like this that are garbage, have massive competition, and are freaking bleeding money, and they're going to dilute the current shareholders, okay? Jesus, what is wrong with you people? Anyway, that's it. Like, subscribe, tell your friends about me, and you have a wonderful, delicious day.